Good morning, Terry. You know what time it is? I know what time it is. It's just another expiration Friday. Oh. Checking on my trades, yeah. And hoping to find what are we going to find, Terry? A pile of money. Are we? Because right now we look at this, we're finding a pile of beep. But I've told you before, laughter through tears is my favorite emotion. So let's check in on things, shall we? But don't peek at this. Let's not look at the year to date. What, you just clicked it? It's $51,000 down so far year to date. That's not too bad, is it? It's pretty bad. 3 month though, we're still in the green, $117,000. So we've been downtown to Chinatown all week, and we are what? I think like exactly $60,000 off our all-time high of 1901, and we're at 1841. So let's check in on these trades, and we'll do it live. I know what these trades are, but I still haven't decided exactly what I'm going to do with each one. For instance, Axelis ACLS 145 call is basically at 100% profit, but they do have earnings on the 7th, and they have increased their guidance prior to earnings. So there it is there. They rise after increasing Q4 guidance. I like the sound of that. So I think instead of rolling this position, which these are monthlies, so if we looked at rolling this, and in full disclosure, which is the only disclosure that I have full, I paid 145 for this position, and it just went down the drain since then, and now it's making a comeback. Don't call it a comeback. I've been here for years, so there's only a penny on it. So rolling it would be just fine if that's what I chose to do. But if we looked at 1 month out, rolling this position, which would be to February 16th, that's 28 days out, and we wanted to still protect the 145, we would collect around $134 on our 14,500. So let's just look at the math. Take a look at the math. Now, again, we're just trying to do the old swan, sleep well at night, because we could easily, come down to 135 and collect dollar bills, y'all. But I'm concerned in a good way that they are going to have a very good earnings report, and the stock is going to go up, whatever, $5-10 a share. And I don't want to miss that. You know what I'm saying? Because then we could double our number at 145 the next time that we sell the covered calls. So I think we'll remain patient on the ACLS, but let's do the math anyways. $147 divided by the dough on the table, 14,500, divided by the number of days, that'd be 28 days, right? Multiplied by 365, beep, boop, boop, 13.2%. That's just not enough cashish return on such a volatile position. So I'll keep you posted on that, and hopefully our patience will pay off. Otherwise, we'll begin selling covered calls under our cost basis if need be. Why would you even do that? So we're going to be aggressive this year. Be aggressive. Be aggressive, because we've raised our goal. Because my friend Snoop Dogg once told me years ago, he said, Bart, you got to raise your game. So I was like, okay, what does that mean? Take more risk. Oh no, not the R word. So if we want to go from, hopefully you saw the video, I shared last year's statistics with you regarding premium collected, dividends stuffed into my skinny jeans, and interest gained on our cash positions. And we were at like 262,000 and change. I was going to make the goal for 2024 300, but you peer pressured me into going to 350. So that's what we have done. So to do so, I have to step outside of that comfort zone just a little bit, right? So we're going to you've been talking for like an hour and you're only through one position. So we're going to let this expire at full profit. I'm just being distracted right now by USO falling out of bed. USO had a nice little run this morning. Yeah. And then let's see, what did we see today? Almost up to $79, and now it's fallen down into a 6/8 handle, currently at 68.92, which will play into what we're about to talk about when we get down to the USO. EOG, not easy as 123. We got a 109.70 puts. I don't even know if I told you about that. Let me go to the trade spreadsheet, because I didn't do a video yesterday, and I think that I made these trades late, but I did a 10 contract put on 97 strike. Exxon Mobil collected $540, and then EOG went with the 109.70, which is well under what I'm in on this for. So I'm taking big time gas on my oil positions. Just wasn't patient enough, and that's fine, because I've also done the math on EOG with regard to fixed dividends, special dividends, and collected covered call premium. If I'm holding these positions for a while, then I laughed. Just like that. So $670 collected there, but both of these positions are under pressure. And in fact, ExxonMobil is underwater because it's at 96.78. Will I take 1,000 more shares at 97? You bet your bippy. I don't know why you stay long oil. Is it confirmation bias? It probably is. Again, though, oil's going nowhere. It's not going away. Yesterday, I bought 1,000 shares. No trades yesterday, but I did buy 1,000 shares of Alcoa for $26.70. Currently trading at $26.45. Wow, wow, wow! But I did all right here. I sold those 10 contracts as calls at $27.50 because Alcoa had a big run to start the day, and I'm like, hey, let's get in on some action. So when it was around just over $27, I sold the 27.50 calls and collected 570 expiring next week. So a 7-day trade. And then since then, it's just, it went all the way up to around 27.20. And now it's all the way down to 26.49, which is under what I paid. But I did also, and it went down. And so about 10 minutes ago, I sold 10 more. Sold 10 put contracts at 25 and collected 200, and then it's proceeded to go down from there. So we'll see. I think I'm safe either way. Alcoa, again, another violent stock, very volatile. But I do believe in it in the near long term, meaning in the next few months, it's going to be $40. Again, if you followed this channel this year, you know firsthand, do not take one single trade advice. And I give no trade advice. I just show you exactly the trades that I make in real time, not all the fluff bunny stuff that you'll see on a lot of the other YouTube channels. I'm not talking bad about them. It's just they only show you, it's like those gamblers that only tell you about when they win, like my buddy Tommy Tuna. I had to bail him out years ago, and I used to make the mistake of loaning people money. But I think I've learned my lesson on that. But he did come to me and needed a little assistance, so I bought his house from him. I bought his house from him because he had just moved in with his fiance, who is now his wife. Bought his house. I paid him a little more than I should have as an investor, but I still I held that house for 10, 12 years as a rental. And he had a lot of equity in the house because he bought it. He had been in the house for probably a decade already. But I remember him telling me at the closing table, because I'm like, hey, now you got this cash cushion here. And he goes like, well, I owe 45,000 of it to my dad. Borrowing money for gambling debts. That's not funny. That's a problem. Yeah. Well, he's since kicked the problem and had 3 beautiful children in the meantime. So congratulations, Tommy Tuna. Anyways, now we're through 2 positions and we're already 7 hours into this. GDX 2850s. I'm just taking gas on that because GDX is trading at what, about 27.50, 27.45. So we're going to pay an extra $1,000 for those apparently, or we're going to roll them. If we roll it, what are we looking at? Can we change? I think I'm going to take those. because I'm looking at GDX being in the 30s within, I don't know, 2-3 weeks. That is a gold miner GDX. If we roll it, can we change our position? No, not on 1 week anyway. So we can't go to 28. And if we just rolled it flat, it'd be 120, right? $120 bills. But it would go to so 28,500. So we collect $120, $28,500 in collateral, 7 days times 365. So it meets our threshold where we look for that 20% mark, but I think I'll go ahead and overpay for them, be patient just a little bit, and then sell covered calls into the sunset. I know that's risky, and we'll just watch the portfolio continue to go down before it then starts to go up. That's my promise to you. It's just not going to be a horror movie or a horror channel. It's going to be a feel-good channel as well. That's our goal. So that means our 2950 calls are almost at 100% profit, and we will not roll those. We'll wait for a green day on GDX, which should be Monday or Tuesday, and then we'll sell another round of the old. So what do we have? I think that these 10 contracts, those 1,000 shares, will give us 4,000 total. Is that correct? Because we did buy some this week too that we didn't sell calls on. Let's take a look. Yeah, so we already have 3,000 shares with an average cost of $29.02. So we're way down in our whiskey here at $4,600 underwater. We'll take those 2850s, so that'll lower our cost basis, our average cost a little bit, and then we'll wait patiently for those calls to get above cost basis, sell those out, or if we wanted to really be sweet, we would wait until it gets in the 30s before we sell covered calls. We'll see. We'll talk about it real time, won't we? Merck 111, these are way underwater, but they're flat as far as I'm finally back to what I paid. And then I, of course, missed the boat, because it went right on up to 118.76. That train went right by me. But this was a long, when did I sell that call? Or roll, so to say, when did I roll it? I can't see with my big head there. December 20th. So it was a monthly. I did a month on that one. So on December 20th, I sold that 111 call, collected $276 in premium for a 119 today expiration. Now we could do, the options are wide open. No pun intended, right? One thing we would do is look for the next ex-dividend date, which probably isn't until March. Is that correct, Amundo? Divvies. Yeah, so they're still showing December. So let's go to the history, dividend history on the dividend tabs here and see what they've done historically. Companies like this typically always will have ex-dividend dates around the same day. So yeah, so it'd be mid-March. So we still have 2 months to wait for that. But they did recently raise that dividend from 73 cents to 77, right? So 77 cents times 400 shares equals 308. Write that down. 308. Why'd you write that down? I think I'm going to do other math too. Hold on. I got confused because I looked over at this garbage pail kid. Bart face. You're probably not laughing, but old school would be this. I looked at this morning also because this is from 1986. Barf and Bart. Do you remember that one? Because, back in the day, nobody had the name Bart, and they still really don't. Bart Simpson, of course, made it popular. But anything, I do collect sports cards with, there's another one. What do you just have cards laying around? Yeah, there's Bart Johnson. So I do collect Barts. Along with other things, just random. Let's just go into a random card show. There's a Warren Moon autograph. You guys remember Warren Moon? Real sweetheart. Anywho, back to the lesson at hand. if we rolled this son of a gun, right? If we rolled this position, what do we have to do to get another buck, right? So we're at 111 now. We need to cover 775 debit. So there's no way we can roll it other than at 111 for a week, right? So if we go all the way down to 111, we'd only collect 15 cents. So if you look at the math, let's do the short-term math. You'd collect 60 bucks on your 44,400 because that's what we would collect today selling our shares at 111 per share, 400 shares, divided by 7, multiplied by 365. So you're at 7%. Wow, wow, wow. But if we wanted to get creative and be like, hey, what if we went out? What if we went out a ways, even like say a month past X dividend date, to try to get another divvy, the $308, and collect another dollar of appreciation, which would then add $400 to the kitty, right? So let's look out. Let's look out here. So if we went to April 19th, 91 days out, and tried to add, what could we add? Oh, it's $5 increments. Well. So sometimes, though, all you have to do is check another chain. Nope. So we'll have to go back to March 15th. Still have $5 increments there. So let's check the first. All right, there's dollar bills, y'all. So if we go to March 1st, so it's 42 days out, can we get another dollar? We can. We can get another dollar bill. So what it would be is another dollar of share appreciation, right? So that's from 111 to 112, that's $400. And then you collect another 468, and then you're real close to another dividend date, right? Where you can start to play that. But let's look at this. So 168, if we rolled it today to the 112, plus the 400, we'd be at 568 divided by 44,400, divided by the 42 days. We'd have to wait for this roll to expire, times 365. We're at 11.1. It's not horrible. It's better than 5%, which is where my money would be in cash here on the Robin Hood. I don't know. Still undecided. I am still undecided, so we will continue to watch Merck today. At the moment, if you're like, you just got to make a decision right now, I'm going to let Merck go just because I've been battling it for how long. In fact, I just looked a few days ago. I actually paid more than 111. It was like 111 and change. So let's go look specifically. It's probably still up because I don't touch the individual much unless I'm closing out positions. So there, yeah, you're right. You're so right, Bart. You paid a 111.15. So that's another $60 you would have to take off of this. Right? Yeah. Because if we sold for 15 cents less per share and there's 400 shares, that's $60. So let's put that sum of gun in there. Insert row below. And let's just put that in, right? Minus 60. That'll change the total there, but then we have to do man math. That means manual. Oh, cracking yourself up again. That's just my own note there. Let's just close this down. Let's just this particular spot out. That's for my own notes. Where's that $60 come from? Well, we paid 111.15 and we sold at 111. So that's that. So now we change the math, right? Because that's actually more than 44,400. You're good with math. So we got to do our, so it's 44,463 224 days in the trade. So that's how long I've been battling Merck. So let's do the exact math to see if how much lower this goes, the 9.7%, now that we've moved to 2588. In fact, let's do it on the abacus, not on your little calculator here. So we put up the 2588, right? So that's premium and dividends that we've collected. Now we divide it by what we actually paid, which was 44,463. 464,463 divided by the number of days in the trade, 224, right? Annualized 365. Now we're at 9.48. And when you're that low on the return, which is still, that's still a fine return. When we say 4.8, yeah, 9.48% is the battle. So essentially, this goes from we were just taking gas and losing the trade after we bought it. And is the internet so slow that it has stopped? Because I don't see the time. Uh-oh, we're frozen here. Hold on, folks. My head isn't moving. Where is the internet? Yeah. Let's check on it real quick here.